Hi guys, welcome back. Today we're going to be looking at Brookfield Renewable Partners and we're going to be doing a stock analysis on this company. The ticker symbol is BEP. So it's one of the top renewable energy providers in the world. It operates in hydroelectric power, wind power and solar power. On top of this, it has storage facilities in North America, South America, Europe and Asia as well. So if you do enjoy, consider liking or subscribing. It is free and it does help me out a ton. If not, thanks for watching anyway. Onto the video. So before we begin, a little bit about the company. So Brookfield Renewable owns a huge diversified portfolio of renewable energy assets. About 2/3 of the company's cash flow comes from hydropower, the rest coming from wind and solar power as well. The company has grown the funds from its operations at a pretty solid rate. It's increased its distribution at a compound annual rate of 6% over the last 20 years, which is very, very solid. Its growth strategy involves acquiring assets it can grow and develop, and in the end, the company manages these assets to generate the maximum value for shareholders. So the management of BEP has successfully repeated this strategy over the last 20 years and plans to continue doing this into the future. It also benefits on the experiences and the strategic insights of its parent company, which is Brookfield's Asset Management, and they own 60% of Brookfield Renewable. Despite this, it's still listed as a separate company. The company also provides a good quarterly income for more passive investors with a dividend yield of 4.8%, which is amazing in today's market. So what is the future growth of BEP? So renewable energy as a whole is going to get a stronger demand into the future. Countries all across the world have set aggressive targets to reduce carbon emission, and with the company primarily operating in the United States under the Biden administration, where renewable energy is a top focus, it will help that renewable energy sources such as wind and solar are more cost effective than their fossil fuel rivals as well. So Brookfield Renewable is very well placed to capitalize on this growth. The company has more than 19,000 megawatts of capacity, and its developmental pipeline could boost that total by 23,000 megawatts, giving it a total of 42,000 megawatts of capacity. So there's, on top of this, they have the most growth potential in the solar power. So the US Energy Information Administration projects that renewable sources will contribute to nearly half the world's electricity production by 2050, and the source that's expected to grow the fastest is solar energy. So solar's share of the global electricity is expected to rise by more than 3% now to more than 20% by 2050. So you can see with BEP operating in the solar industry and having one of the largest bases in the solar industry, it will definitely benefit from this growth and this move into solar as well. The next thing we're going to be looking at is a technical analysis. You can see that this company has had a pretty solid 2020, starting from about $22, finishing the year at close to $50 before tapering off in January to about $38 before rebounding to $42 where it is right now. So you can see this is a consistent uptrend. It wasn't like a shoot up like Tesla. It was consistent but healthy growth. That's why I believe that the company is not due for an imminent loss. Another good point that we can see is that the company actually rebounded when it got close to the 200-day simple moving average, hinting that the company is not yet settling into a downtrend. On top of this, you are getting a pretty solid company at a cheap price, more than 20% discount from its highs earlier in the year or towards the end of 2020. That's why I believe it's trading at a good price right now, slightly under the 50-day simple moving average. So I believe it's a good buy price. So just some final words about the company. It is a solid company, has good future potential both in the renewable energy sector, more specifically in the solar energy, has a good entry price, trading cheaper than what it was a few months ago by a significant amount, while still not going into a downtrend. But one thing we do need to keep in mind, and this is a major risk about this company, is that the company's financials are very subpar and it is not profitable. It is set to get better in the next few years, but we do need to understand that the risk is always there if the company should fall into excess debt or shareholders lose sentiment about this company. So if you do choose to invest, make sure to do your own due diligence, and thanks for watching. Bye.